Hello, everyone, and I wish you all a very good evening. So, on behalf of the whole Atal Innovation Mission team, as well as the Tinkerchamps team, I welcome you all to another exciting session of ATL Tinkerpreneur 2024. So, today's topic is about business finance. And so, the journey of Tinkerpreneur has been a very, very exciting one. So, at the start, you learned about how to create a digital product. You started by learning a few digital skills, then creating the product, then how we actually refine the product. Then we jump towards how to create a business model out of it, and we actually define something. I wrote something like a business model canvas, and further we then moved into how to market our product, because just creating a product and creating a business, we need to market it well in order to sell them. So right now we'll go towards a very new stage of the Tinkerpreneur journey. It's about business finance. To help us learn that, we have a very own Tinker champ from Bangalore, Shreyas Bhatt, with all of us. So you might have seen Shreyas in some of the sessions in some earlier video series as well. So I would like to welcome Shreyas. Shreyas, hi. How are you doing?
Hello, I'm fine. Thank you for the introduction.
Yeah, so we have a lot of teachers, we have a lot of students, we have a lot of mentors who have joined us for the session, and we are all very, very excited to learn business finance from you. So, over to you, Shreyas. So, one thing for all the students, you can ask questions in the chat window. So, whatever questions you have, you can ask in the chat. Once the session is over, you can take one. Okay, so the stage is yours, Shreyas. Over to you.
Thank you. Okay. So, hello, Tinkerpreneurs. And firstly, I would like to congratulate all of you on making it so far. And I hope all of you are excited to coming to the last stages of Tinkerpreneur. So today we will go through business finance, and typically we have this stereotype where it is said that business finance is a little complex, these terms are very boring, and it might be very confusing, or we may find a lot of jargons throughout this topic. So in the upcoming this session, we'll make sure that everything is very simple, it is fun, and all of us understand a lot about business finance today. So before I started, let me just give a quick intro from where I come from. So as said earlier, I'm a Tinker champ, and throughout the years, our journey has been wonderful, where we are trying to spread a culture of tinkering, innovation, and entrepreneurship, and creating a positive change around the society. We have done several initiatives. You might have heard about it before in our previous sessions. And I would go on and tell you about a little bit about myself, just so you know. I've just completed my grade 12th, and I'm a member of Tinker Champ Club. And even my journey started from Tinkerpreneur, the first batch, which was in 2020 to 21. So that's when even my journey started. I started tinkering, building products, and now I'm here. So I would wish all the participants best of luck to complete their Tinkerpreneur journey this year, and also move ahead and keep tinkering and innovating. So before we jump into business finance and I explain you all with everything, here I put down a few questions you could see on my screen. Uh, at this point, you might be wondering, well, you've built your product, everything is ready. You can have a few questions like these in your minds, like how much money should I spend on this business? When will my business become profitable? And what payments do I have to make? Who are suppliers? What are vendors? And what is owing money to someone? So how do I manage throughout the part of handling money in my business? So to answer this, there is only one stop solution for all these questions that you have, which is business finance and business accounting. So I'll jump in and tell you very simply what is business finance. So business finance is nothing but managing your business money. So it is the methods and the procedure to manage your money that is generated through your business. So we'll simply put it up as this. And what is business accounting? So under business finance, business accounting comes. And what is accounting? It is systematically recording, measuring, and interpreting all the financial information related to your business. So now we will go through in detail of all the accounting procedures so that we can understand it better. Before that, now all of us are entrepreneurs. We can call ourselves as entrepreneurs, future entrepreneurs who will launch our businesses, right? So why is business accounting or business finance important to us? Firstly, it will help you track, it will help you keep a track on your whole business's spending and income. And any terms that you're not able to understand right now, I will be explaining all of them later. And then it will help you understand your business's growth. And most important reason for why accounting and business finance is important for us is it will provide us with the information upon which we can make good business decisions. So if you do not account this important, ignore this, then you will be making not so good decisions when you're starting out. So now let us go through a few basic terms regarding business so that we are familiar with it. So we will understand customers, suppliers, expenses, revenue, and purchase. So we'll go through these 5 simple topics. So here is customers and suppliers. So there is on my left hand side, there is vendors and suppliers. In the center, there is a business owner. That could be you. And on the right hand side, I have my customers. So we all know the business owner, that is you. And we know what customers are as well, that will purchase from us. So vendors and suppliers are something who will provide us with services and raw materials, which I'll be telling in detail in the further examples. So I hope everyone is clear with who are customers, who are suppliers, and who do we call the business owner as. So if you're clear until now, you can put a thumbs up in the chat so that we can also know that you're into this. So we will start out with few very little concepts like purchases. So now what is a purchase? In this flowchart, if you see, there is an engine, a picture of an engine, right? So now let's say the business owner is Rohan, or let's say it's you. You can imagine yourself in the place of Rohan. And then there is our supplier called Bharat. Okay. So now, let's say Rohan is into manufacturing cars. So he purchases this engine from the supplier. So that he is using this to build his product, right? So this is how it goes. The supplier gives him the engine, Rohan buys, and he pays for it, and the supplier receives the payment. Okay, this is how the cycle would go. I hope everyone understood what is purchases. Now we have expenses. Okay, purchases and expenses. In both cases, it is spending money. But what is the difference between these two? In purchases, we are using the money to build the product. Whereas in expenses, we will use the money to run our business. That can include rent, telephone charges, and printing and stationery charges, marketing charges. These things are there to run the business. It is not there while it's not necessary to build a car, right? But engine is necessary to build a car. So that's how you differentiate between purchase and expense. So I hope that is clear. So if you understood the difference between what's a purchase and what's an expense, you can put a thumbs up. And again, there is this flow chart, which is similar, and to explain what is an expense. Okay, now we have revenue. Okay, what is revenue? Revenue, you might have heard this or you may not have heard this, it is the money you earn or your business earns by selling the products and services that you have built. So let's say now Rohan has built his final car and Aditi, who's our customer, buys it, pays for him, and the price of the car is paid, and Rohan or Rohan's company earns the revenue. So revenue is nothing but money coming into you through your product or service. So I hope revenue, purchase, and expense all three are clear, and the difference between them is also very clear. Okay. So now that we have covered the very basics, we will move on into the actual part of business accounting and finance. So we have a lot of topics here. I'll just read you out what all we'll go through. So we have payables, receivables, payments, and then we have purchase order, invoice, payment receipt. And at last, we have profit and loss statement, cash flow statement, and balance sheet. So maybe this might be overwhelming while you hear it for the first time, but all of this will be we will go through this like very simple and in a fun manner, right? So let us go on to our first three set of topics. We call these as mini concepts. If these are very simple concepts, we will have fun while learning these. So we'll go through payables, receivables, and payments now. Till now, I hope everything is clear. Let us dive into payables. So what could payables be? While when you hear the term payable, if you can guess and have an idea of what this could be, you can put it in the chat box or you can type it. So I have a few pictures like when I heard the word payable, what I tried to relate it with something called paying, right? So I put on a few pictures and question marks. So you can tell me what comes to your mind when you hear the word payables. So you can put that in the chat and we will go ahead and actually see what payables are, right? So here is an example of payable. So here we have our supplier and business owner. The business owner could be you. So what exactly is a payable? So let's say a supplier sells you something, a raw material that is required, and you buy that with only some initial amount. You do not pay the full amount because it might be a credit that you're taking from the supplier. So the remaining amount that you haven't paid is a payable for your supplier or vendor. As simple as that. So in this diagram, you can see that the supplier sells you and you buy this thing that he sells you with some initial amount. And the remaining amount is called as a payable, right? So this is what a payable is. I hope everyone understood the concept of what payable is. Okay, let us see an example of a payable. So here you can see, let's say I purchased a software tool and it is worth rupees 2000 from the supplier. Initially, at the time of purchase, I'll just give him 500 rupees. So now the remaining amount is 1500 rupees. You can see in the first row in my column here. That 1500 rupees will become the payable. Similarly, I again pay him 500, my payable reduces. Again 500, payable reduces. Until the payable is zero, I will keep paying to the supplier. So I hope payable is very simple. So payable, we can keep it in mind, something that we owe to others, right? That is the concept of payable. Now receivables. So let us think what receivables are. So when I first heard this term receivables, even I came up with a few ideas. I've put it down here. And whatever idea you get by receivables, you can see. Or if you're thinking after understanding what payables are, maybe you're close by. You can actually guess what receivables are. So let me explain you what receivables exactly are. Similarly, how we just went through payables, receivables are something that the customer owes you. So let's say we have our customer here on the on the right hand side, and the business owner, and you sell your customer. The customer will take it on an initial amount, and the remaining amount will be receivable. So payable was something that you owed money to others, and receivable is something that others owe you money. So that is called a receivable. I hope you understood the concept of receivable. It's the opposite of payable, right? So let me give you an example. So let's say a customer bought ebooks and you or I sold 5,000 rupees worth of ebooks. At first, the customer paid us only 1,250. The remaining amount will be our receivable because we have to receive it from our customer. As simple as that. So now I guess payables and receivables are very clear. So that's how payables and receivables are. We will go to our next topic, which is payments. Okay. Now payments, I guess everyone, all of us have done payments. We know what payments exactly are, right? But how important is it to track payments? Before that, let me just tell that when you need any sort of service or a product that you want to purchase, you pay for the product and you receive it. So that's a payment. So now our business owner, it could be you or it could be Rohan, is asking us how important is it to track our payments. So payments is this one important term that we have, that this concept that we have to make sure that we keep a track about all our payments, because when you buy something from your supplier, it is a payment that you're making, and when you receive something from your customer, that is a payment that is you're receiving, right? So when you track this particular concept and you have a note down of all of it, you will have the numbers from all the sides. So you can easily calculate and manage the upcoming topics which is related to this. So I hope everyone have understood the three concepts: payables, receivables, payments, and why payments are also important, right? So now we will go to the next set of topics. These are called transaction concepts. So all these three are related to transactions: purchase order, invoice, and payment receipt. These are something that you can do it, and you have to do it while you're going through any sort of transactions. So let's start it with purchase order. So when you hear the term purchase order, what might come to your mind? So is it ordering something, purchasing and ordering it? Is it like ordering through Zomato or Amazon, or are you purchasing something? So give me your ideas. What could purchase order mean, right? You can think about it right now and ponder what exactly could purchase order be, when the term might be confusing. So you can think once before I move ahead and tell what exactly it is. Until now, if you have understood everything, you can also give a thumbs up so that we know and you also are clear with what all has been through. So now let me tell you what is a purchase order. Okay. A purchase order is nothing but the customer requesting you or the business owner asking for the product. So a purchase order is sent by a buyer to the seller for a service before it is sent for delivery or anything like that. A it's a piece of paper where it's a proof of paper where it is shown that okay, this is this product and this quantity is required by me and I'm willing to buy this. So that is nothing but a purchase order. So here I've given you an example of what a purchase order could look like. So if you see, this one is a physical purchase order with the Tinker Champs logo in it. That one is a physical purchase order that we had built. So this can have our order date, it can have the information, the what service or product you require, the quantity and the amount. So this could be used as a physical purchase order, while you know if you're shopping online, then you might have seen this. When you've ordered something, the payment will show awaiting, and it will show you the detailed bill, right? This is nothing but a purchase order. So I hope everyone is clear with what a purchase order is. This will be our first transaction concept, purchase order. I hope everyone is clear. You can give a thumbs up if you're clear. So now we have invoice. So invoice might be a new term for many of you, or it might be somewhere heard. The picture that comes to my mind when I first heard invoice was something like this, which is on my left hand side. And what exactly an invoice could be, let us see what exactly it could be. Right, so invoice is something that comes after purchase order. So now you have received a purchase order, then then as a business owner, you send the confirmation of the order and you request for payment. That is an invoice, right? So an invoice is a bill that the seller sends to the customer and tells the payment is pending. Okay. So it is a way to notify your customers that whatever you had requested, we will provide you with it, and here's the invoice. Again, we have a physical invoice and we have a digital invoice. So you might have received a lot of invoices where the bill is given to you and you there it is shown that your order is successful. This is the payment that you have to do, right? So that is nothing but an invoice. So I hope purchase order and invoice, both of them are clear now. So after invoice, what happens? Payment receipt. Right? What is a payment receipt? Now in the fourth picture, you can see bill. We use this word bill a lot of places, right? So what is this payment receipt? When we have paid the supplier or the business owner, when we have paid it, we receive a payment receipt, right? And I guess most of you would have experienced this when you would have gone shopping with your parents and they've bought all the groceries and the cashier gives you a payment receipt and then your parents tell you keep this safely till we go out, the guard will check it. So you have to hold that payment receipt very responsibly till you go out, and then the guard puts the seal on it and lets you go out. So that is nothing but a payment receipt. So I hope the concept of payment receipt is very clear. This is just an example of a payment receipt, but I hope most of you got a better picture in your mind after that example. So these were our transactional concepts. It was purchase order and invoice and then payment receipts. So these three things are important for it, and I hope all of you have understood from the beginning till now that what are uh, payables, receivables, and payments, then what is purchase order, what is invoice, what is payment receipts. All of these six concepts are very clear, and I'll be moving forward with the main concepts that will be helpful for analyzing how our business is performing and make decisions based on this. Okay. So at first we have profit and loss statement. So what could profit and loss statement mean? So in our mind, whenever we hear profit, it is something positive, it's going up. And when we hear loss, it is something that's going down and we are losing something, right? And a statement, we may think it's just a record of these two things, right? So now let us see how exactly a profit and loss statement should look like and what the table would be. Here is an example of how your profit and loss statement should look like. So it will usually have these five topics. Firstly, it will be revenue, then it will be tax expenses, then it will be your tax, then it will be your net income, and upon your net income, you will calculate whether you have made a profit or a loss. Okay. So now I've told you what revenue was in the very beginning. So revenue was all the money made by the company by selling the products or services. So whatever money you have earned is your revenue. Okay. And expenses, this will include the money spent on running ads, the cost of making your products, all of it. So this will be the expense part. Okay. And then taxes are there, and now necessarily in the early stages you don't have to worry about this, because if it's a small it will be small revenue and you are here to understand the concept, so you don't have to worry exactly how this works. But you can remember that this is also a part when you're calculating your profit and loss statement. So how do you calculate your net income? Here is where the calculation comes. So now we have understood what is revenue, what is our expense. So now if you subtract our revenue, expense, and if you subtract our taxes, if we are paying taxes, and then comes our net income. Okay, so you take whatever you have made and then you subtract it with whatever you have spent. As simple as that. You take whatever you have made, you subtract it with whatever you have spent. There comes your net income. So now when you do that, if your net income is positive, then you have made a profit. If it is negative, then you have made a loss. Right? As simple as that. So let me give you an example to understand it better. So here, let me say this is my revenue on the sales of products and services was 5,000 rupees. Okay. And then I purchase software license, and my expenses on marketing, stationery and telephone, it's around 1,600. So now what do I do? Total how much I've spent is 3,600, and total that I've earned is 5,000. So I take 5,000, subtract it with all my spendings. Whatever remaining amount is, it is my net income. And because it's a positive number, 1,400, we will call it as a profit. As simple as that. So I hope you understood the typical table and the things that will be in a profit and loss statement. So on my right hand side, there is a much more detailed uh, profit and loss statement that might be something that your business would look like in the upcoming years if you're going ahead and creating more revenue and having more expenses. This is something that is there for a much more detailed and bigger company. So I hope everybody is clear with the first concept, profit and loss statement. So if you're clear, you can give me a thumbs up. I'll understand that we can move ahead. So if I have to see, this will be the thing. First is our profit and loss statement. Now we will go to our cash flow statement and then balance sheet. Till now we have covered 7 topics. So I'm repeating all this because so that we don't forget what we have learned, as well as we recall it and move ahead, so it's easier for us to learn what is coming next. So till now we have learned 7 topics. I hope everyone is clear with that. We went through three mini concepts, then we went through our transactional concepts, and then we went through our profit and loss statement. Now I'll go through the cash flow statement. Before that, if and all of you can recall what we have gone through, it will be good. Okay. So now we come to cash flow statement. As as said earlier, now profit and loss statement, everyone had an idea what is profit, what is loss. But cash flow sounds like a tricky term. What could cash flow be? Is cash flow something related to cash, like coins or notes that we have? And is it keeping a record of those things? What exactly could cash flow statement mean? You can let me know your ideas there and tell me what cash flow statement could mean. And now let us see exactly what a cash flow statement is. So here we have 4 main topics for cash flow statement, and we have a new topic called opening balance. So what is opening balance? Let us understand this terminology first. Opening balance is the amount which you are starting out with, as simple as that. Okay. So let's say you just started your business in the month of August. This coming August month, you start your business. And then with yourself in your pocket, you have 500 rupees and you start your business with 500 rupees. Okay. This will be your opening balance. The amount which you already have is your opening balance. All right. And then you put your revenue. We all have discussed what revenue is again. In total, whatever you have earned in that particular period of time is your revenue. And then you put your expense, which is your total amount spent, right? Total money you've spent. So now what is cash flow? Cash flow is adding the opening balance with the revenue and subtracting with all the money you've spent. With that will be your cash flow. So I hope everyone understood what is opening balance. That is very simple. If you take a period of time, what amount of money that you've started out at that time, you will be considering that as your opening balance. So now let us take two scenarios as examples to understand why is this cash flow statement important? Why should I take my opening balance, add it with revenue and subtract it with my expenses? So why exactly should we do this? We will understand. Here we have two scenarios, okay? And then let's say scenario A, the person is calculating his cash flow every month and making decisions on that. Scenario B, the person is not calculating his cash flow statement and spending according to his wills and desire. So in scenario A, you can see in January month, the cash balance is 5,000. That means the opening balance was 1,000, the revenue was 5,000, the expense was 1,000. And then the remaining, this 5,000 will be your next month's opening balance, so that you will know, okay, this month I have 5,000 positive, so I can spend anything between 5,000 and which should be like behind lower than 5,000, right? So similarly, you can make this important decision that how much money do I have, how much can I spend, and how much should I save up. This important decision is made through cash flow statements. So you can see in scenario A, throughout 6 months, it is staying positive. And at June month, you can see the positive is 5,000. In scenario B, the spending is going not according to any decisions made on the cash flow statement. The spending is happening on its own. You're not in control of it. So what happens at the end of June, you can see the opening balance becomes only 500 because the cash balance is 500. Throughout these months, the expenses are not considered and decided carefully. And then we will have a cash negative over there that is there in the red color, minus 1,500. So now when you have this minus 1,500, it will become a problem. So you'd always maintain your cash flow positive. So on scenario A, your cash flow is positive, everything is green. In scenario B, at June, your cash flow turns negative, right? So this is why cash flow statement is important. I hope everyone understood what cash flow statement is. So we covered 8 main topics, and it is a good thing that we have covered all these topics and all of you have learned them properly. Any doubts, we will clear them at the end. Till now, I hope everything is clear. You can give a thumbs up if you understood cash flow statement and why it is important as well. Okay. So now we have something called balance sheet, right? So let us ponder upon what balance sheet could be. So let me know your ideas. I've put a few images over here. What could balance sheet be? So is it balancing something with your finance? Um, like I've put a few images balancing. What idea can we get when we hear balance sheet? So make sure that you remember all these 8 topics and recall them now, because after this we will also have a little testing to make sure everyone has understood what we have been gone through till now, right? So let us see what balance sheets are now. Okay. Here we have an example of balance sheet. Here we have something, two new terms. Okay, we'll go through two new terms here: assets and liabilities. So let me tell you what assets are, and then we'll go to liabilities. I guess you've heard these terms before as well, assets and liabilities, right? So let me tell you, what does a balance sheet do? A balance sheet will represent the financial position of your business. At what position are you from a specific period of time? You can choose a specific period of time, and it will tell you the financial position of your whole entire business of that uh, period of time. So now let me tell you what assets are. Assets are anything that is uh, that will generate revenue for you, and it is important to run your business. Okay, so assets could be, equipments or uh, machines that are used to build your product. So that is a fixed uh, asset that is always there to help you build your product and run your business, right? Something which is positive is an asset, and a liability is always a negative, and liability is something that you have to pay, right? It could be something that is always taking up it is always taking up your money in a periodical way. Okay, so now I hope everyone understood what assets and liabilities are. It is very simple. So this is asset and this is liability. Asset is something that will bring in money. Liability is something that will take away money from you. As simple as that. Okay. So now that we understood assets and liabilities, now you can understand what a balance sheet is, right? A balance sheet will tell you the business's worth at that particular time. It will tell you what are the assets and what are the liabilities. Okay. So in this example, you can see that in the column of assets, there is cash, there is receivables, there is land, there is office equipment and supplies, all of that, right? All these are assets. And then in liabilities, there is account payables. Okay, so now let us see how is this assets and liabilities we know. Because accounts payable is something we have to give. And assets are something all that we own and we have to receive, right? So all these are positive, this is negative. Then this will give you the worth of your business. Okay. So that was, oh, just sorry. So this was balance sheet. So till now, I hope we understood what did we learn, right? We have gone through 9 important topics: payables, receivables, payments, and then purchase order, invoice, payment receipt, profit and loss statement, cash flow statement, and balance sheet. So these 9 topics are the most important one for in business finance and accounting. So I hope everyone understood these topics very well, and you have no confusion in them, and there was no terms now that you find very difficult, or you find it very complex, right? So congratulations on completing all these topics with me. I hope it was fun and very easy to understand. And let us now I'll ask you very 4 basic questions to see if you have understood this. You can all answer it in the chat box. Okay. Which of the following is not included in CFS? CFS is nothing but cash flow statement. We went through that, right? So I hope everyone remembers when I showed you the cash flow statement, I gave you a table and I told you these 4 things are there in cash flow statement. So now I'm asking which is not there: revenue, expense, or selling price. So you can type in the chat box what is not there in cash flow statement, right? I'll wait for like 5 seconds and then we can see what is the answer. Okay. Let us just go to cash flow statement. Here we are. So we have opening balance, revenue, expense. We have these three things in the cash flow statement, right? So what do we not have here? Which is, it is the selling price. So I guess selling price is already covered before, and you know what selling price is. So selling price is not related to cash flow statement. That is option C is the right answer. Okay, and now let us see the second question. Which of the following does not come into the category of income? So all of you can tell me, go through these options and tell me which is it. Manufacturing your product, selling your product, or selling your service or maintenance. Okay, so which of these is not your income? B and C, you're selling your product or your service of maintenance, right? In these two things, you're selling something and you're receiving money. So that will become your income. Whereas in A, you're manufacturing it, you're spending your money. So that is not your income. So option A will be the correct answer. We have another question here. Which of the following is not a case of a payable? Payable is our first topic that we learned, right? Payable is something we owe money to others. That is a payable. So in these three scenarios, which one is not a payable? Money due to pay the supplier, money due to pay by the customer for the product, or money due to pay the auditorium. Okay? So what is not a payable? So here for the third question, the correct option will be option B. Money due by the customer is a receivable. Okay. Now I'll go through our last question. So let us have it very quickly. Let us see who answers fastest. Profit and loss statement summarizes what? So what does profit and loss statement contain? Revenue, cost, expense incurred, or is it researching your business, or is it the growth of your business? So the correct answer is option A. It will tell you the revenue, the cost, and the expense incurred in your business. So I hope you had fun playing this very little quick quiz. Right now we have a few fun activities that I would like to highlight. You can go to your AIM portal back. You can read the comic book on the business finance. You can solve a few puzzles if you would like to get better at the terminologies. And you can have flashcards to revise what all we learned today. So now let me cover what is your assignment, which is very important because you will have to be submitting this. Okay, the first step for you to do is download the app, and then you have to add sample data for all the necessary details which is there, and you have to do that for purchase and expenses, then payments and receipts and payments made, and also you have to create reports. What all we have learned now, we will be creating reports of it. And then finally, you have to submit it. I'll just tell you all these 5 steps in a little detail. So firstly, you can either scan this QR code, or you can also check in the portal's slide deck. You will have it over there as well. You have to download this app, which is accounting bookkeeping, right? It's a very simple app. And step 2, you will have to add product sales, expenses, and purchases. These details, you have to add it in the columns. Currently, you may not have made any sales, you may not have actually earned money, but for understanding, you can put anything. So you can refer the tutorial deck to add sample data in this. Okay. And then you have to add the payments you have received and payments you have made. You can assume this as same, right? You fill these 2 columns as well. And then now you can generate reports. You can click on the profit and loss statement. You can create a profit and loss statement for yourself. You can understand how it actually worked. You can also create cash flow statement and balance sheet. Same as that. Okay. So I hope all of you will try these 3 things out. And your last step would be creating a Word document and taking the screenshot of all the 3 things that you have created, all the things that I've shown you. Take screenshots of it, put it in a Word document, and then you have to create a PDF. You have to turn this into a PDF and then upload this PDF in the submission form. I hope that is clear now. Hope your assignments are clear. And I would now like to end the session. And this would this was a very great session.
Yeah,
I would
actually, it was very exciting and full of insights. Like I personally got to learn a lot about business finance with the session series.
thank you.
Thanks a lot. Like even from my side, from all the teachers, the students, and the mentors who have joined in today. So very much thanks a lot for explaining it with so much patience, with so much detail, each and every topic. This video will be available always on the Airtel Innovation Mission YouTube channel. So anytime any student or any teacher wants to come back and have a look at it again, please feel free to do so. So thanks a lot, Shreyas.
Thank you.
Uh, Now let's we have a few questions, Shreyas, if you have time, then we can
Yes, yes.
take them. Yeah. So, like you explained in very much detail about payables and payments. Like, just a small dot. Are these the same, or what is the difference basically?
Yeah. So we can see the difference between what payables and payments are, right? Because both the terminologies are very similar sounding. So payable is money that I owe to someone, and payments are the thing that it's a proof of record that okay, I've paid my supplier and I've received this payment from my customer. That is payments. So paying someone for a service or a product is a payment. As simple as that. That is the key difference.
Oh, awesome. Thanks a lot for explaining it. Another thing is like similarly, there is payment receipt and invoices. So, what is the difference between those?
Yeah. So payment receipt and invoices may seem very similar because it's a step that just comes after invoice, right? So if I tell you how I had explained it before, invoice is it's a confirmation of the order that you sent to the customer, while a payment receipt is the proof that the payment is that the money that you had asked for is received, right? So in the invoice, what happens? You are asking for money, and in payment receipt, you're telling that okay, I've received it.
So, can I say in the flow is in this way? Like, first you generate the invoice,
Yes,
then you send it to your customer, then they pay it, and then they get the payment.
exactly. So in the transaction concepts, that's how it comes. First, a purchase order. You receive a purchase order from the customer,
Mhm.
then you send an invoice to them, and then they give you the money, and then you send a payment receipt telling that you've received it. So that's how the transaction happens.
Wow, great. Okay, so coming towards the last question, Shivas. So, like, we are all tinkerers, we are all tinkerpreneurs, and we build products, we design products, we innovate, we try and like tinker around things. We build, let's say, I design something and I create an app and it's ready. But why is it so much necessary to calculate profit and loss? And what will I lose if I don't actually pay attention? I can actually hire someone for it. And I can ask them to do it. And why should I get involved in this profit loss? Why calculate it? And
Yes. So very important uh, basic statement is profit and loss statement. And why is this important? Is so let's say you've created your product, you like your product, you've done some innovation, you like it. So you want to continue doing this. So the major decision that will make sure for you to continue doing this is whether you're generating money. If you're creating a profit, you will survive, you will sustain through, and you will keep on making this that you like. So if you do not understand and make decisions based on if you're making profits or losses and adjust according to that, then soon enough, whatever you're built and whatever you're trying to do will not keep afloat. So that is why you have to pay very detailed attention towards all these statements and understand each and everything that is going on in your business so that you make sure that it will stay afloat and keep running. Uh, I guess you're on mute.
yeah, I'm so sorry.
Okay.
So thanks a lot for answering it, Shreyas. Like, and one more very important thing for the student is that like you need to even though you're building the product, you're designing something, it is your product. So you need to understand all the nitty-gritties of it. So not just in finance, also in marketing, you need to understand about it. Like at least not in too much detail, at least you need to have a bird's eye view about it so that everything is linked to a goal of your business. So all those things get satisfied and you move towards achieving it. And it is important because whenever you get stuck in something, like it will not be a very smooth sail. Like in the Tinkerpreneur journey, it's never a smooth sail that everything goes in a very straight line trajectory. It has always ups and downs and ups and downs in the business. So for this, you need to understand each and every aspect of business as much as detail as possible. We can't become a master of everything, but we need to understand some aspect of everything in each and every. In like let's say for marketing, we need to know what digital marketing is, what are the various techniques we are using for inorganic, organic marketing. Then for business finance, we need to know whether we are actually getting are in profit or not. Like we and how, if we are not in profit, by how much time, what time duration we can become a sustainable business. So yeah, so that was the session for all of you by Shreyas. Thanks a lot, Shreyas, from all of us. We are forever grateful to you for taking the session. We really enjoyed it a lot, and I hope the students, teachers, and mentors have done it too. Thanks a lot from everyone again. Any last tips that you would like to give our Tinkerpreneurs who are actually this is towards the end of the Tinkerpreneur journey. So any last tips that you would like to give them?
Yeah. So last tips like I would like to give you is not just focus on the product itself, but also as you just mentioned that you have to be an all-rounder and know everything around your business. Because as a tinkerpreneur, you're not just innovating, but you're also becoming an entrepreneur. So now we are at the second stage of tinkerpreneur. The first one was tinkering. Now we are at the entrepreneurship part. So I hope you do the take the best out of it and learn a lot of new things, and also keep continuing after you finish your journey at this particular tinkerpreneur.
Yeah. And to that, do that. Like, please also keep engaging with your mentors as much as possible. They are experts of this field. Like, do take their help, do take their guidance in whatever way possible. Try staying connected with them forever. Like for each and every small thing, they are ready to help you in whatever way possible. Also, do submit your assignments on time. And when the final product submission is there, I hope, like we really hope that it is completely ready and you submit it well. So, yeah. So all the best to everyone on this entrepreneur journey. We hope you are enjoying it, learning something new each and every day. We'll be organizing many more feature sessions with all the Tinker champs like Shreyas like very soon and like very frequently now. So thank you everyone for joining in. Thank you Shreyas for conducting the session. Have a good day and
Thank you
happy
so much.
tinkering.